Hello to all our viewers. As you all are aware that Oro just recently launched Orostocks, which as you know are based on some strategies which are very well have worked in the West, and we have brought it similar for the Indian markets, mainly for our retail audience. One of the major reasons which we also discussed in our last video was that many people were just investing on the basis of some tips or some recommendations without any it was backed by research. So we thought that let's bring some institutionalized discipline strategies, and we have made it available to all our retail investors. So you know that there were two strategies. There was Oro Momentum and OroValue. Today we are gonna speak something about OroValue strategy. As you rightly know that value, and it is a very common term used in the Indian equity space. So there is a very famous saying known as price is what you pay and value is what you get. So OroValue just focuses on stocks which we think are currently undervalued. When I say undervalued, it means is the price currently is less of the underlying value which can be unlocked over a period of time. So yes, when it comes over a period of time, it is a long-term strategy. It is not like a very short-term view that you can take on a particular stock, because here the whole idea is to garner some value over a longer period of time. Now when it comes to the process about how we select stocks for OroValue, it is mainly based on a fundamental theory by which we look into the financials or the fundamental numbers which are being declared by the company. So normally we look into some of the return ratios, as you commonly know that return on equity and return on capital employed as the most famous ratios used to calculate profitability, and also we take into account some other ratios. On the operational side, we see that how has been the operational efficiency of the particular company, and also the leverage ratios. So how much is the debt equity composition of the company. These are some basic ratios that we take into account. And then we also move into some of the valuation ratios, which are mainly EV by EBITDA, price to book, and price to earnings. Apart from this, we also look into some other ratios, and then a combined scoring of all these particular ratios help us to identify some stocks which will technically go into our OroValue basket. In order to mitigate risk, we only keep our universe restricted to BSE 200 companies, because of which you do not face any kind of issues with respect to liquidity, corporate governance, or even the auditors signing it off or something like that. So this is our risk mitigation strategy. So we have just completed around a month from the actual launch of our Orostocks. Just to give you a little bit idea about the performance, so OroValue basket during the month of December has clocked around 5.2% return absolute, compared to our index, which is BSE 200 total return has clocked close to 1%. So of course it's a very short time period, and yes, the strategy has clocked more returns than the index, and the expectation is that over a longer time frame, OroValue technically will generate a good amount of return over the compared index. Of course, it's not any guidance or any, I would say, forecasting numbers about a particular performance, and yes, past performance cannot be a judgment for future performance, but at Oro, that has been our forte, to keep on advising clients on which would be the best picks or which would be the best portfolio in order to meet their investment requirements, keeping into account the risk profile in mind. In order to understand a little more about this strategies, you can always log on to www.stocks.orowealth.com, and you can have a view of both our baskets. And even if you have any queries, you can please mail it to us on connect@orowealth.com. Thank you.